Hey, welcome back, everybody, to today's Market Explained, a four-star media experience. A little different show today. We usually do market commentaries, but we periodically do interviews. And today we have a really interesting interview subject, and it's Katie Hubbard. Katie, welcome to today's Market Explained.
Thanks for having me, Brian. Good to be here.
Excellent. Now, besides being a good friend, you're also involved in the housing market. Um, what is going on in the housing market, Katie?
Yeah, so the housing market is definitely a little bit gummed up right now. So on the existing homes, rates are still so elevated. You can't get a mortgage, 30-year fixed is over 6.5% today. And so that is just keeping buyers on the sidelines. So we actually have the biggest disparity between sellers and buyers that we've had in 12 years, and the lowest existing home sales we've seen in 30 years. So
Wow.
we're selling 3.93 million homes this year, and pre-COVID levels, we were selling 6 million homes a year. And so
Wow.
people are just, they're also nervous about the economy, but really interest rates are keeping people on the sidelines, and home prices have gone up. Since 2019, home prices have gone up 60%, and rates have doubled, and insurance has gone up 60%, and
Wow.
taxes have gone up 12%. So it makes a horrible picture for affordability, and that's why you don't have a lot of transactions happening in the existing home market. And then on the flip
So,
side, oh, yeah, go ahead.
so there's no supply and no transactions, and prices are going up.
Yeah, so we actually do have an elevated amount of supply right now. Supply is up 16%,
Okay.
but you're seeing more, about 24% more sellers than buyers right now. So supply has increased. We've got about 1.53 million homes of inventory, but the seller expectations are not matching what buyers can afford.
You see. Okay. So, well, Katie, I should have asked you, tell us a little bit about yourself and why do you know so much about the housing market?
Isn't it every little girl's dream to work at Home Depot when they're young?
Yes.
When I grew up, I just love home building. I worked in Home Depot for 4 years. I studied real estate and construction management at DU, and then got my master's in finance. I went on to work for a home builder. I worked for Lennar Homes right out of college in Colorado building homes as a project manager. But I realized very quickly that, wearing a hard hat and steel toe boots and being in the snow and working in a construction trailer probably wasn't gonna be good for my skin long term, so went back and got my master's in finance, but have just always loved home building and construction. Like, I do a few flips on my own, I've built a few houses, just my passion.
Nice. And so you know a lot about the housing market, and you've turned that into a career, and you're with a group called Walton, I understand.
Yeah, so I work for Walton. I've been with Walton a total of 10 years. It's an amazing company, privately owned. It was started by Patrick and Maureen Doherty in
Mhm.
1979 in Canada.
Mhm.
And they started this amazing land investment company with a humble 14 acres of land. They got their friends and family together to invest in land, and that did very well when they sold it. So then they bought more land, and then it turned into what now is a global organization. We have nearly $5 billion in assets under management and about 90,000 acres of land that we own. So today it's run by our CEO, Bill Doherty, the three children of Patrick and Maureen, and our headquarters is in Scottsdale.
Nice. So then Walton buys land, and what do they do with the land? What's the purpose?
Yeah, so it really is going back to the start of the company with Patrick and Maureen Doherty, where we buy land and then we sell it. So we're buying it in the path of growth. And we've evolved into now we're a very sophisticated land acquisition organization where we've got acquisition real estate experts all over the country. So we're looking for land in the path of growth where really people are moving and they're going there for jobs. And when you have population growth, you need more housing. So we're looking at people, jobs, and permits. And so we're acquiring land in the path of growth specifically to sell to home builders. We're really helping them design master plan communities where people are going to live, work, and play in the future. So we now do it on a large scale, and our clients are public home builders and large regional builders.
Okay. So then they buy the land from you, and then they build those housing complexes, right? Is that how it works?
Correct. So we've, in the past 46 years now, we've bought and sold over 350 parcels. And sometimes we acquire it and we do the zoning, and
Okay.
sometimes we actually will sell it to the home builder who will complete the zoning and the entitlements, which is just the legal right to be able to build on that land. And so that's really the evolution is we're selling for communities. Sometimes we will have a parcel and a master plan that's retail data centers. We've sold land to Amazon. So it just really depends on what the highest and best use is. But really, it's really developing communities where multi generations are going to live for years to come, and it's usually on the outside of the city limits. So going, that next phase of development.
So in the life cycle of a property, buying the land is like a first step, right? And then that land goes to a developer develops it, and then a homeowner buys it. Is that how it all goes?
Yeah, so usually it's you have a lot of times land has been transacting down in families from generation to generation. So some of the wealthiest families in the US have been big landowners. So we're
Mhm.
buying it from farmers or wealthy families that have been passing it down or investor groups that bought it a long time ago. So we're buying it. And then we are oftentimes bringing in or selling it to a land developer. So not
Mhm.
the vertical developer, but they're putting in the land developer will put in the infrastructure, make sure that you can turn on the shower and flush your toilet. They're putting in the
Mhm.
streets, the roadways, tying into the public utility system. So doing large scale underground earthwork. And our CEO likes to joke that you want to be the first son, the second wife, and the third developer, because the developer is where that's can be a riskier part of the real estate life cycle. You're typically investing a lot of, millions of dollars into that infrastructure development. You've got to
Sure.
really time the market right. So you can make a lot of money in development, but that's why there's really about 50 national developers that dominate in that space. And then they will actually put in the lots. So for the homes ready to build vertically, and they'll sell lots to the home builders themselves. Some of our builder clients have in-house land development as well, and some of them will outsource that to a land developer or they'll buy it from a land developer. But home builders, they're in the business of building and selling homes, and that's what they want to do to generate revenue. And there's 8 publicly traded builders, and their revenue is over $126 billion annually, and they're in the business of selling those homes. So they want to get in as late as possible, and their build time, it's shocking to me. When I was building for Lennar 20 years ago, they would build a house and, we would build it in about 10 months, and now the build time is about 4 months to build a home.
Amazing. Well, so you mentioned all these public companies and stuff like that, and you said some of them do their own land development or land acquisition. Why don't they all do it that way? I mean, is there some advantage in working with you guys?
There is, it just depends on really how big you are. The bigger builders keep getting bigger. The public builders dominate, home building with 60% market share, and Lennar and D.R. Horton, the number 1 and number 2 builders. They build 1 in 4 homes in this country. So 25% of all homes built are built by just 2 builders. So they have the ability to secure capital, lock up the land, and scale their operations, to be able to maximize their margins and reduce their costs. So we work with them, a lot of the big public builders to land bank for them, which land banking is where Walton will come in, we acquire the land, and then they will take it down over time through option contracts, and then they will build the homes and repay us the original capital that we put down through home sales, paying us an interest rate along the way. So for the big builders, they want to work with land bankers, and they have the option to work with a group like Walton, one of the largest landowners in the country.
Nice. So then Walton owns a lot of the land, but then the land gets put into structures that other investors can be involved in, right? That's the gist of our discussion today too.
We do, yeah. So we have ways that accredited investors can invest with us. So we've got growth opportunities where Walton sources the land, and we're delivering 1031 eligible land investments for accredited investors. You can also just invest cash in. So we find the land, we place the money into a specific parcel, and then at some point in the future, typically 3 to 5 years, we'll sell it to a public builder or one of even a regional builder, and our clients get their money back at that time. It's all growth, and you can
Mhm.
defer your taxes in those structures. We also do income funds, with our builder clients where they're sourcing the land themselves, we're just funding it, and they're paying us an interest rate, so that generates a yield, usually between 9 and 11.5% net to investors. That's quarterly income
Yeah.
for clients.
Okay. So they get 9.5, 11% income. What other benefits do they get?
Well, it's just, I mean, it's a great way to diversify their portfolios. It gives
Hmm.
them access to housing without having to go buy a home builder stock or building material stock. So it's really diversification, and it gives you a way to get into, you get some alpha in there as well, with a fairly decent risk adjusted return. But you'll want to, talk to your financial advisor to see if it would be appropriate for you. You could talk to Brian about that.
Yes. Thank you. They can talk to us for sure. So are there different structures of partnerships, Katie, where just some are more debt structured, where we lend money to Walton to buy land, or some that have growth as well built into it?
Yeah, so we've got both. We've got income where we're financing land, so it's a really private credit for home builders, and that's going to be your income opportunity. $100,000 minimums, accredited investors only. And then we have growth. Those are typically targeting, an 18 to 22% IRR. That, every parcel is different, so everyone has a different model, typically holding those 3 to 5 years with no income along the way, because we're just going to be purchasing the land and then selling it to a builder at a point in the future.
Okay. And have there been downturns in this business? And what would that look like if we bought maybe at the wrong time?
Yeah, so absolutely. I mean, we've been doing this for 46 years, and you want to be timing the cycle correctly. So if the land values are depressed, you want to be buying, and if land values are high, you want to be selling. What's interesting is that land, I mean, it's a scarce resource. They're not making any more of it. And so land prices have gone up quite a bit just with all of the building that has happened since COVID, and everybody and their mom moved to Florida, so that market got pretty overbuilt. Land prices went up, housing prices went up. So every market is different for sure. And I would say that, yeah, it just depends on the market that you're in.
So this would be attractive investment for what kind of profile of investor, Katie?
Yeah, so I mean, everybody's different, and we typically work through financial advisors like Four Star.
Mhm.
And it could be for somebody that wants to pass assets to their children or grandchildren. So you can
Mhm.
invest cash into our growth offerings. And then
Mhm.
when we sell the land, you can defer the taxes and do a 1031 exchange, which is just a way to invest in real estate and defer the taxes and not pay them.
Mhm.
1031 into another growth offering. And if you just keep rolling that a few times, pass that to your kids or grandkids or whoever you're leaving your assets to, and then they can get a stepped up basis and completely eliminate the tax. So it's a great way for people that want to grow their assets for their heirs.
So
And then,
you could use it to build a portfolio, or it could be a shorter term investment as well, right?
yeah, you could just do one. And then when we sell it, you could just take your gains and pay long term capital gains. Absolutely.
Okay, interesting. All right.
You can also invest in your retirement account. So if you wanted to grow your retirement assets, it's a great way to grow those assets before you're going to be taking them out. So you just leave it in there and keep rolling it into a few different offerings, and that's going to give you some potential for good growth in retirement.
Sure. Well, when you said, Katie, that we're in a really strong growth market, prices are rising and interest rates staying higher, they're really slowing things down a little bit. How did we get in this position? How did America get in this position where we're short home units, but yet people can't buy them?
Well, that's a good question. I mean, we're short, millions of homes to just meet current demand. So people are really been forced to rent. There's 46 million renters. And if we could get rates back down to 5%,
Hmm.
which that's not going to be anytime soon, but if we could, that would pull 6 million renters back into the home purchasing market. And so
Hmm.
what's interesting, we talked about the existing home market, but on new home sales, we have seen the big builders just build through this cycle, and they
Hmm.
have the margin ability to be able to lower the home prices. They also buy down the mortgage rates. So if you go into a new home community, you can get a 30-year fixed rate mortgage for 4% or less, which really is a big advantage for young people coming out of college, Gen Z and millennials who have the income and they might have good jobs, but they can't afford, almost 7% interest rate. So they go to a new home community, they can have all the amenities. A lot of them work remote, as we know today, so they don't have to go drive into the city. And that's keeping that entry level home purchaser going, which is really the big builders are focusing on that, entry level 350 to $400,000 home.
It's interesting to say that's entry level, and I know that is because that's where housing prices are, but entry level used to be half that or a lot less than that not too long ago.
Yeah, so for the first time we've seen this year that it is actually cheaper to purchase a new home than it is an existing home. So the existing median home price is 435,000 and the median new home price is 401,000. So it's 7% cheaper to get a new home and then you don't have all the headaches of dealing with an older home. Might have to drive
Interesting.
a little farther, have a smaller yard probably.
Yes. So be a little further out maybe, right?
Mhm. Right.
Yeah. And you mentioned earlier when we were talking about certain markets that you don't think are really normally the markets to be investing in. They're not the high growth markets, but some of these markets have really turned and there's some interesting dynamics right now.
Yeah, so right before we had this call, I was looking up the data on where new homes are selling the best. And Indianapolis and Chicago are the only two markets where new homes are considered strong. And the rest of the country is either, really soft or even weak.
So why is that? What's going on? What's in the water in Chicago or Indianapolis?
Well, it's really affordability. So in the Midwest, you've got that affordability factor where the average home price is $337,000. Probably not in Chicago, in Wrigleyville, where you and your friends are at, but or Lincoln Park, but outside into the suburbs, you can get a more affordable home versus the Northeast. Houses are over $500,000. You go west, you're over $600,000 for the average home price. So just it's driving people there for the affordability in the Midwest and all the great, nice people.
Nice. Well, good. So how many years has Walton been offering partnerships like this style of investment, either the income one or the growth equity one? How long have they been doing this?
So we entered the US market in really late 2008, early 2009 when the housing market crashed because land was on sale. So we came and entered and started acquiring in markets. And so we've been exiting those lands since then, but that was our first entry. And then we really have ramped up, started working with the top home builders in the country just in the last 6 years as far as formally financing land for them, where we've been transacting with the publicly traded home builders over billions of dollars worth of land since 2010, or sorry, in the last 10 years. And then we just brought on our DST or 1031 offerings in the last couple of years.
And what is a DST?
So a DST, it's a 1031. The way to simply explain it, it's like a 1031 transaction, which is where you're investing in real estate, selling real estate, investing in a new piece of real estate, and deferring the taxes and doing it with strangers that you don't know. So it has evolved from a tick structure. You probably heard of, the old tenant and common structure. The problem was the ownership control, where you might have one holdout partner that didn't want to sell. So now it's held by a trust, a Delaware statutory trust. So you're investing into the trust. You own a percentage of the trust, and then Walton is making decisions on behalf of the investors to get them the maximum return.
Interesting. Great.
There are a lot
Well,
of DSPs out there. I know Forestar works with quite a few. So there's some that have income and they're in, multifamily, industrial, different asset classes. Walton's unique in that we're really the growth play and also different that we're all equity and land as well.
and then you have those special tax structures as well. So there's lots of opportunity for different types of investors, isn't there?
Exactly. Yeah. You don't have to be selling real estate, definitely.
Yes. Well, Katie, this has been a great discussion. Any other last thoughts about the real estate markets you want to share with us before we close today?
Yeah, I would just say, like, as you're reading the headlines, a lot of people are hoping that the rates come down. And most consumers think that the 30-year fixed rate mortgage is tied to the Fed funds rate. And it's actually more closely tied to the 10-year treasury. So if you're on the sidelines waiting for rates to come down, really check out the 10-year treasury. The spread between the 30-year and the 10-year is historically 170 to 190 basis points. Today, you're sitting at about 220 basis points of that spread. So it's just showing that the market perceives more risk for holding longer term. Also, something that people are talking about in the industry is potentially the current administration trying to privatize Fannie and Freddie. So that'll be interesting to see what happens there. Maybe getting a stable coin. I've heard about that. And
Mhm.
so it's going to be interesting to see what happens because obviously we're hearing the administration wanting to bring the rates down. And if that happens, then existing home sales will get back to normalized. And the new home market's doing actually quite well. for the big builders. If you're a small builder that can't compete, if you're Bob the Builder out there and you can't buy down mortgage rates and you're not building and selling 90,000 homes a year, it's hard to compete with the builders that are giving $100,000 discounts, incentives, doing anything that they can to keep people buying those homes. So smaller
Right.
builders are struggling right now.
Right. Great. Well, thank you. Thank you, Katie Hubbard. This has been a great discussion. So there's opportunities in investing in property and land and housing. Then each investor should contact their own financial advisor. And as Katie mentioned, Forestar has a good group of financial advisors that do know these subjects, and the programs from the Walton Group are on the Forestar platform as well. So there you're eligible to create a portfolio with this program and others together, just like you create a stock or a bond portfolio. So you have many different investments in alternative investings in real estate and other things like this to create a good income stream and a good growth stream as well. I think we'll leave it there today. Thanks, Katie. Thanks for being with us today.
Thanks for having me, Brian. Great to see you. Take care.
Okay. Thanks, Katie. All right. That's it for us, folks. Today we'll be back again with another great episode of today's Market Explained. Bye bye for now.